So you've got some cash saved up, but you aren't sure exactly where to invest it? Well, this video is for you. Considering the average savings account yields 0.05% annually, it's likely you'll want to invest some funds outside of your bank to grow your net worth. Everyone is going to have different interests, goals, and risk tolerances, so you'll have to decide for yourself what's best for you to invest in. But my hope with this video is that you'll be able to see some real-world examples of some returns that you can make on investments of about $1,000. You also want to consider the liquidity of the investment that you choose. So for instance, if you know you want to buy a house in 2 years, you may not want to tie up your funds in a 5-year-long investment. But first, a quick disclaimer. I am not a finance professional, and nothing in this video should be construed as investment advice. Investments have inherent risk, so you should do your own research before investing any of your money. This is simply for your entertainment. If you want to invest in the stock market but don't want to worry about picking the right stocks or managing it on a regular basis, you may want to consider investing in an ETF. ETFs are exchange-traded funds, and they're essentially a collection of different investments. They are bought and sold during the day like stocks, and they can help you diversify your investments or narrow your investments on a particular industry. For instance, this Vanguard real estate ETF invests heavily in real estate-related stocks and funds. At the beginning of 2020, I opened an account with M1 Finance to see what it was all about. On this platform, you can build a custom portfolio of stocks and funds, or choose to follow some expert portfolios. You can also do fractional shares, so if you don't have the few $1,000s it takes to buy one share of Amazon, you can still partake in the stock. When you first sign up, you build a pie of investments. I initially picked a few Vanguard ETFs, Apple, and Netflix. And then I ended up depositing $1,000 into this account. When it came time to finalize my investments, which they call your pie, I honestly found their oversimplification of everything kind of confusing. So I only ended up investing in VUG, Vanguard's growth ETF. I made that investment on January 29th of 2020, and now it's January 2nd of 2021. This account is now up 34% for a $342.30 gain. This is a really great return for an ETF. If you remember the market crash in March, my portfolio hit an account low of $723.88. But I didn't sell or do anything, I just let it ride, and it recovered nicely. So compared to the S&P 500, which was up about 16% for the year, this growth ETF beat that by more than double. Since it is a growth ETF, it is on the more aggressive side, but honestly, that's one of the things I like about it. All in all, this ETF was a pretty solid way to make some decent returns in 2020, and I plan on holding it through 2021. If you haven't heard of Fundrise before, it's essentially a REIT, a real estate investment trust. But unlike most other REITs, this one is not traded. Instead, you can buy shares of it by creating an account and depositing money on their website. Fundrise invests in and owns a diversified real estate portfolio, and they allow the average person to invest in it. They take investors' funds and use that to buy income-generating real estate like apartment complexes. On their site, they tout its institutional quality without the fees due to their proprietary software. It all kind of sounds just like marketing words to lure you in, so I've remained kind of skeptical. Personally, I love real estate, but with $1,000, there's not a whole lot I can do, so I decided to give Fundrise a shot. In November of 2019, I put $1,000 into Fundrise to see what returns I could actually get. One thing I like is they will give you updates on the acquisitions and projects that your portfolio is currently involved in. So they'll show you photos and give you a brief description on what they're working on and where, like this multifamily development near Dallas or a distribution facility for Pepsi. But let's look at the most important part, my return on investment. It's sitting at 11.1% overall, with just 9.2% return for 2020. These returns are slightly above average, but not amazing by any means. Now, your shares of Fundrise are meant to be held longer term, at least 5 years. If you want to cash out before that, there may be some fees involved. Hopefully, more and more of these real estate developments in my portfolio will start to stabilize and bring in more revenue, increasing my returns. So we'll have to see how it plays out over the years. If you want to be a little bit more involved in the contents of your portfolio, you can always opt to buy individual stocks of companies that you like. For instance, I first opened a Robinhood account in July of 2019, and I did it for one reason: to buy shares of Tesla. So I bought 4 shares for $228.97 for a total of $915.88. Those were the days. Since Tesla underwent a 5-to-1 stock split a few months ago, my 4 shares would have turned into 20 shares, and the $915.88 investment would now be worth $14,113.40 for a 1,433% return on my money. Absolutely insane. I even bought a 5th share in August of 2019 for $231.88, so all of those shares today would be worth over $17,000. Unfortunately, my crystal ball was broken, so I ended up selling these shares earlier this past year. I sold 3 for $800 a piece in February and sold my remaining 2 shares in June for about $1,000 per share. So my initial $1,147.76 returned $3,252 in gains in less than a year. Of course, Tesla is an exceptional example, and most stocks don't perform like that, especially in such a short period of time. But even a stock like Apple would have given you a return of 76% for 2020. And Apple isn't really an outlier either, because tech was on fire in 2020. AMD stock grew about 93%, and even the more stable Microsoft grew 39%. If you want to invest in some of your favorite companies, you can open a brokerage account on something like Webull, and you can get 4 free stocks when you deposit at least $100 when you use my link in the description below. But no matter what brokerage you use, I do recommend looking at a stock's chart and looking for supply and demand zones before you just go in and buy some shares. This way you can find a good entry and really maximize your returns. Of course, if you're planning on holding the shares for like 10 years, maybe you don't care so much about finding the perfect entry. But if you want to learn more about identifying supply and demand zones with stocks, leave me a comment below and let me know. Bonds are definitely not the most exciting way to invest $1,000, but they can be a pretty safe investment. I have an account on a site called Betterment, and in 2016, I deposited $200 into an investment savings fund. This portfolio consisted of 80% bonds and 20% stocks. About half of this portfolio are US Treasury bonds, which are a form of government debt security, which makes it virtually risk-free since it's backed by the US government. Since it is a safer investment, the returns are more modest as well. After 5 whole years, my $200 investment has grown to $237. Time to retire. It returned 3.5% for the year and 18.7% return after 5 years. So maybe it's good for diversifying your retirement plan, but for me, I want to invest my $1,000 elsewhere. Okay, maybe you don't want to stick with boring old stocks and bonds and ETFs, and you want to invest in something like crypto. You've probably heard that Bitcoin's continually hit all-time highs lately. It's currently sitting at over $31,000. If you'd invested $1,000 at the beginning of 2020 in Bitcoin, you'd have over $4,000 just a year later for a 400% return. Of course, the question is, can it maintain this type of growth? Because it is a newer investment and unregulated, so inherently there is more risk to go along with it. I bought Bitcoin in March for $6,200, but yet again, my crystal ball was on the fritz, so I sold a couple months later for a gain of $2,400. Still a win in my book. This one's a little different than the other 5, but perhaps you don't want to invest in something passive and instead want to take that money and invest in yourself, whether it's starting something like a side business or investing in your education. With $1,000, you could start a computer or smartphone repair business, you could start a cleaning business, a photography business, do website design, tutoring. You could even start a YouTube channel and use the money to buy any equipment you need and start marketing. Or you could take online classes, buy software, do whatever you need to do to expand your skill set to help you get a pay raise or qualify for better paying jobs. The choice is yours. So when it comes to investing, I recommend investing in something that you're at least interested in and hopefully understand. I personally don't have a solid understanding of crypto, so I tend to invest more in stocks. Let me know in the comments below what your favorite investment is, and if I left something out, let me know. If you'd invest a mouse click by hitting the thumbs up button on this video, I will give you 1,000 Shroot Bucks, giving you an infinite return on your investment. Was that stupid? That's all for this one. See you in the next one.